All right, everyone. Thank you for joining in this morning. A very good morning and a warm welcome to Cyberview's second live panel discussion for 2021. My name is Nadia from Cyberview Sindra and Berhad, and I will be your moderator for today. Now, ladies and gentlemen, the pandemic has paved the way for innovation, which is no longer a luxury, but a necessity. In fact, a 2020 study by Forrester found that COVID-19 spurred the plans of 34% of firms in Malaysia to start on their digital transformation journey this year. So it is no surprise that innovation tops the list of success factors. Now, while innovation brings the exciting prospect of transformation, it comes with its sets of challenges. Among the factors that can derail the innovation journey is a lack of support, funding, and skills. So in today's session, our conversation is about one of these factors, funding. We will discuss how companies can leverage readily available funding opportunities, including grants and incentives, to accelerate their digitalization efforts. In Cyberjaya, companies can also seize existing living lab capabilities in a robust tech ecosystem. We'll find out more about what this ecosystem is about later. So on the panel to talk about financing the future, investing in creating and building digital business models, we have three esteemed speakers, each offering a different point of view. First, we have Zuhri Rasheed, Vice President of Business and Technology Advisory at Malaysia Debt Ventures Berhad, or MDB. He oversees consulting and technical services. Prior, he had served various roles within the financial services and in several technology multinationals, such as Grant Thornton International, NEC Asia Pacific Group, Asian Finance Bank, and a Fortune 500 company, formerly known as Electronic Data Systems, EDS. Next is Khairul Anwar Mohamad Zaki, Chief Executive Officer of Pandai Education Sindra and Berhad, or Pandai. He brings with him passion for the education landscape and 14 years of experience in various local and international educational initiatives. Beyond his education accolades, he founded Idon Technologies, an award-winning technology company focusing on areas such as software development and data analytics. Pandai is one of the fastest growing EdTech companies in Malaysia that focuses on nurturing the potential of school students through personalized quality education. Not to mention, they're also one of our 5 startups for the Cyberview Living Lab Accelerator CLLA program. The 5-month program is currently ongoing. And thirdly, we have Shafinaz Salim, who is the head of Technology Hub Development Division of Cyberview Sindra and Berhad. She brings vast experience in the digital arena, having previously served as the strategy and planning manager with Malaysia Digital Economy Corporation, MTech, who is also our strategic partner. Today, Shafinaz is responsible for strategizing, designing, developing, and executing key enablers to elevate Cyberjaya into a global technology hub. In her current role, she has been instrumental in driving the development of Cyberjaya as a vibrant global tech hub, making it a vibrant smart city. Thank you to all of our speakers for making today's session possible. Now, I would like to remind everyone that we will have a Q&A session at the end of this webinar. Feel free to share your questions at any time throughout the discussion. We have a Q&A box below you can see, and we will address them later. Don't forget to also include the name of the speaker the question is addressed to. But before we start, we have a quick question to ask. It will appear on your screen right about now. The question is, are there enough funding facilities in Malaysia, and are they easily accessible? So it's either a yes or no. Let's see what you think. Interesting analysis over here. It looks like it's a 50-50. But perhaps slightly more of you, or it's fluctuating, I'm not sure why. Okay, all right. So I think we can conclude that a little bit more of you, slightly more of you says no, there are not enough funding facilities in Malaysia and they are not that easily accessible. Very interesting. All right, thank you for that poll. All right, So now let's get started with the questions. My first one is for Zuhri from MDB. Now, Zuhri, MDB provides project and financing facilities for technology-based companies at different stages of their business. So this includes startups like Pandai and also SMEs. Now, MDB's proposition is that it has a different approach compared to other financial institutions. So how is this reflected in the available funding that you offer? Are there gaps in the current financing ecosystem? And so how does MDB come into play?
Thank you, Nadia, for posing that question. Coming back to the point earlier where you mentioned that we need more funding, especially in these trying times. So let me give an idea of what kind of funding that MDB comes into play and whether there are still gaps in the market or rather the ecosystem that we see in the market right now. So basically, if we look at the current ecosystem, especially for startup companies, typically, obviously, they would have to rely on investors like venture capital investments, and also they would seek support from governments, especially the agencies, which provides instruments such as grants, seed capital, and some sort of a soft loan. However, all these structures are quite complex for these agencies to understand, especially startup companies, which is quite an emerging technology in this region, particularly when we are looking at a lot of intangible type of business models, digital in nature, without any assets backed, and a lot of these companies are able to generate revenue, even though we don't see much of those fundamentals that I mentioned earlier. But however, these kind of companies are not new to the other parts of the world. If we look at the US and the UK, those matured markets, we can see that there are a lot of activities for fundraising, especially for startup companies. And this is where I think MDB is strategically positioned, whereby the products that we have at the moment, which are largely venture financing for startup companies, are able to mimic of those offerings that we can see in the Western world. Case in point is that we have a bit more flexibility in terms of your growth for capital when you do your fundraising, whereby you need funds, right, to achieve your next milestone. But at the same time, you also have some concerns about your equity. You not want a dilution, not just for the entrepreneurs, but also for the investors. And also to bridge your next round of funding in terms of financing rather than equity, which leads to a higher valuation of your company. So this kind of structure is quite unique in our ecosystem right now, and I would be happy to say that MDB is among the unique agencies under our ecosystem at the moment, which are able to provide this kind of structure in terms of venture finance. It would probably achieve a more balanced fundraising with less costly capital structure. So I hope that answers the question, Nadia.
All right, so I think one of to fit into MDB's proposition is that you replicate some of the models that are used abroad, how it's done in their financing ecosystem. You bring it over here. I think that's one of the gaps that MDB fills in the funding arena. Now, my next question is for Khairul, CEO of Pandai. Okay, Pandai is an emerging startup in the area of EdTech. So if you're a parent, you may have even used their learning app, which among others provides digitized textbooks based on the national curriculum, which is extremely useful, especially during the PDPR period. And now we're seeing the PDPR is coming into play again with the COVID situation not improving as much as we had hoped for. So Panda education is centered on the convergence of technology and learning. So it's no understatement when I say that your business model is very forward thinking, even though you started before the pandemic happened. Khairul, you started off by self-financing in the early stages, but now you have managed to secure a huge grant. Can you tell us, and all the companies and startups, other startups that are joining us this morning, how is the experience like looking for funds? Khairul, you're on mute.
All right. Thank you, Nadia, and thank you again to Cyberview for having me here. Very excited to be here. And regarding funding, to be honest, it has been a very exciting journey for us. And before Pandai, we've been in business together with some partners. But previously, with our existing companies, we actually grew it organically. So funding is actually, to be honest, new for us as well. And previously, we've grown the companies, both in education and technology. I would say, some say it's the safe way, some say it's the stupid way, but or regardless, we managed to grow it organically and, started very small, and then we hired the first staff, I think, in our second or third year, and then it grew, and now it has, the whole group has, I think, almost 100 staff under the group. But by maybe the reason we didn't have any external investment, not because we were proud, preventing other people to be in the company, but previously we were doing quite traditional stuff revolving around services instead of product. But in hindsight, looking back, maybe because we didn't get any external funding, easy money, we were forced to focus on two important things. One, completing our service or product, shipping it early, and number two, getting money from paying customers. Sometimes when we get easy money, then you would, okay, maybe we ship later, maybe, we get payments later, we just provide everything for free. But with Pandai, Pandai is very new. It's about almost 18 months old. But with Pandai, we knew it would be different because it, even though it's still on education, it'd be a technology startup. We want to grow very fast, and we need external funding for this purpose. And however, last year when we started Pandai in January 2020, right before the COVID situation, we were focused on product development throughout last year. We were approached by a number of investors, angel investors, VC, some listed companies as well, approaching us. They want to be involved with Pandai. They like what they were seeing last year. But we felt last year we were a bit too early to accept external investors. And last year, even though we grew a lot through word of mouth, we didn't, use any paid advertising. We spent zero on paid advertising. But last year, by the end of the year, in our first year, we had 104,000 registered users. So we were happy last year. And we realized that this year, with the traction that we had, and we were able to help so many, students around Malaysia during this pandemic, we know that it's time to get the investments lah. And more recently, we've received a couple of term sheets from VCs. We're also talking to a few more, both local VCs and international VCs. We are still deliberating, but we plan to complete our investment round soon, probably by mid of this year, but the latest. So we'll see how it goes. Another reason why we were able to delay our equity round is because we've gotten actually several grants throughout last year. And maybe just to share a few, the first one we got was Traju Superb for 500,000 ringgit. That was when we were in ideation stage. And then mid of last year, we got Cradle for 500,000 ringgit for commercialization. And then end of last year, we got a My Hackathon for 250,000. And early this year, the National Technology Innovation Sandbox by Musti, another 500,000 ringgit. So there were also a lot of other smaller ones here and there. For example, we've gotten a grant from Islamic Development Bank from Saudi Arabia, who like what they were seeing with Pandai. So we gotten 40,000. That's in dollars, by the way, and some other winnings from other pitches here and there. So to be honest, this is all something new for me. Throughout the 12, 13 years before Pandai, we've never had any type of grants before. So with Pandai, we were a bit fortunate, to be honest. So we're happy with this. So that's one of the reasons we were able to delay our equity rounds until this year.
Khairul, you mentioned about having to deliberate. You need to go through the process of deciding whether to accept investments or not. So at one point in the early stage, you said it was too early to accept investments. And even now, you are still deliberating on whether to receive more. How do you go about this decision-making process? What do you factor in?
All right. First of all, last year we focused on product development. When we first launched our product, everything was for free. So we wanted to, ship very fast and allow our users, which are the students, to experience the product and get immediate feedback, iterate. We've changed quite a number of fundamental offerings that Pandai has throughout last year, based on the key learnings, key insight that we had last year. So and then towards the end of the year, last year only, then we started to offer the premium version, the paid subscription and all. So we realized that we needed to, secure our business model, make sure that the traction is there before we started talking to all these external investors. Another key consideration would be the valuation as well. When it's too early, then the valuation will be much, much lower. So by waiting a little bit more, then we can get a much higher valuation. And now we are quite comfortable with the valuation that we've getting so far. And finally, I would say number 3, it's also the type of investors that are coming in. There are various types. Some provide money only, whereas others may provide, the monetary help and also other type of assistance. For example, opening of the markets, connecting us to, prominent organizations, helping us along the way in the form of, coaching and advisory as well. So those are the kind of things that we've been thinking, and it keeps us awake at night actually. So hopefully we can close this by June, mid of this year, and return back and focus on what's more important, which is grow the company, building something that actually solve a problem and get customers to pay for it.
All right, Khairul. Now, Shafinas, so far you have seen countless startups in their journey to realize and advance their innovations in Cyberjaya. We're designed to be a launch pad for commercialization, Shafinas. So in your observation, how different are the startups in terms of the innovation they bring to the table today, as opposed to before the pandemic? I think the funding ecosystem is largely influenced and affected by the pandemic, and the companies are too. So what are some of the more unique challenges that these companies are facing because of the pandemic?
Okay, thank you, Naida. It's very enlightening to having to hear what Zuhry mentioned as well, looking at this, trying to bring or replicate whatever the learnings from the models from the overseas, and then added on more with the experience and interesting journey from Khairul's of Pandai. That also validate our, in terms of having to see of the more homegrown or local startups in the scene today, especially surprisingly during this pandemic situation, irregardless of what people can't really make physical movements. But then again, there's new models that you have to look at, which is the digitalization. And obviously, even some of the keywords mentioned by Khairul just now, we can hear that even for the likes of Pandai, you made some changes from your fundamental offerings, right? Based on the key learnings, and that shows that the demands of the consumer market landscape, and that as providers or the startups have to quickly make those changes as well, because at the end of the day, in order for businesses to survive, it's all about capturing the markets. It's about go-to-market. It's about commercialization, and therefore, what will be the unique offerings? So that would be the strategy thinking that will be required by businesses to look at what would make you difference in order for you to survive in the current during this pandemic situation. So, and most importantly, I think for the businesses, when we engage with the startups, even what the other agencies, even the other industry players are talking about is also to embrace the forward-looking, the growth of the mindset of the businesses. How fast can one business able to quickly come up with a bold digital strategy at a rapid pace? So, and all that, I think we have exemplary enough to look at how Pandai, as one example from our Living Lab Accelerator, has tremendously seen some of these the changes. And there are other also from our experience, from our cohorts of our accelerator program, the likes of, for example, among our early days of the lorry. Even during the pandemic, they too pivoted in terms of capturing the market, whereby they make use of their mobile services, mobility services through the 4x4 vehicle to deliver groceries and also parcels. Aside from just before the pandemic, it was more of catering on the enterprise market. There are other more of these from our startups experience that we have seen the pivot change that is required in their business models in order to capture a market that has changed somewhat from the landscape due to this pandemic. And with that, I think the challenges that the companies face would be the need for the speed to have that change and to think fast enough to be able to adapt to the changing of that market and the demand. And this is actually proven from the survey, even from our partner, Magic. They've done some of the survey among the startups that the startups actually face the declining of the sales. I think over 64% experience the deep decreasing of their revenue streams. And even you can see even the SMEs are somewhat struggling here in Malaysia, because if some of these SMEs are not fully digitalized and they are fully relying on the physical offline method, then it's going to be a tough time, a big challenge. So with that, I think this is where innovation, technologies, and digitalizations will make a difference for any startups or SMEs or the businesses in order to go through and survive during this pandemic situation. And with that, I think in order for them to grow and sustain and coming up with the product offerings, obviously there will be also the need of the funding, the financing. When we want to go to market, there's somewhat certain gaps of the financing requirements that we require. Just like how Khairul mentioned earlier, yes, they got several different types of the grants from the government, and even that is carrying a different parts of the value chain of the enterprise. You started off maybe for product development purpose. You've got this grant for commercialization purpose, and you got these other grants is actually part of the ideation purpose. But there will be the next growth that you're looking for. It's all could be about marketing, or you may want to look at the capturing the bigger markets or the overseas market, and that you will need a different sets of financing. And this is where, for us, Cyberview, we always look out for more partners in the ecosystem. As you know, in one of the components of the ecosystem would be on the funding or the financing part. So MDB is one of our mutual partner that would address among the gaps in the enterprise value chain with regards to the funding. So the offerings of MDB, if previously MDB other existing products is more of what the industry out there understood for most bigger companies or companies with already businesses or customers, but they also they saw the gaps at the needed funding from the startup side. And this is where for us, Cyberview in Cyberjaya, we are with the growth of the startups, they also they wanted to grow. So this is where through the alternative funding offered by MDB would help the startups to actually have access and also understand better the kind of the emerging tech and innovation that they're looking at, and that they're able to access it with a much convenient or ease of the processes to the funds that they require. So yeah, I hope that gives a little bit of how, from our views, our point of views in dealing with our startups today with regards to the pandemic today, and how it would has given a different flavor, also the challenges that facing due to this pandemic.
My next question is also is for Zuhry, still talking about how the situation has changed before and after the pandemic. Zuhry, has there been a difference in the trend of seeking financial support from companies before and after the pandemic? What have you observed?
Sure. If we can recall a year ago, there were a lot of announcements by the government to actually provide some relief funds, not just the typical business as a whole, but as well as the technology companies. Main reason was because we were facing a lot of uncertainties in a lot of global markets. So the investors are actually having some knee-jerk reaction to the forecast of this pandemic impact. So because of that, a lot of fundraising had a bit of, I would say, like a break during early last year. And then the momentum came back towards the end of the year, rest of the year, due to the recovery confidence of most of the businesses. But largely in Malaysia, the trend was a bit different. A lot of our startup companies were already actively seeking or rather raising funds prior to the pandemic. There were a lot of agencies having a lot of campaigns, initiatives, promotional events, which I believe most of the startups were being invited to. And then when the pandemic happened last year, all these investors took a bit more time to actually reassess their risk portfolios. So because of that, the fundings were a bit later than usual. So because of that, MDB were able to actually came up with some sort of a relief funding, courtesy of the Ministry of Finance and Ministry of Science, Technology and Innovation mostly, to actually bridge those funding gaps, whereby you can see a lot of startup companies face a lot of problems doing marketing, for example. A lot of customer acquisition had to be put on hold or rather on slower pace. Some of the working capital requirements had to be revised. We are talking about reducing number of headcounts or maybe some pay cuts or even shifting rented premises to a more affordable locations. I know this kind of changes were happening in the past 1 or 2 years, pre and post pandemic. And in terms of the current situation, we are seeing a lot of positive traction. A lot of companies are able to secure new rounds of funding. A lot of investors are back in the market. They are more aggressive now. They are looking for an alternative asset class as a whole, not the typical products that they are more used to, like bonds, fixed income, and some conservative assets, because those assets are literally impacted by the pandemic as well. So if you can see, startup companies are actually blooming. They provide some innovation on top of the digital access in terms of customers and products and services. The keyword here is robustness. Startups are more robust compared to conventional businesses in a way that they have a fallback plan if physical or tangible resources doesn't work. We have this digital in terms of access for still to provide the products and services.
All right. Okay, I think Khairul can relate to that. That's why we're talking about digital transformation, how important it is for companies, not just technology-based companies, but even the conventional and more traditional companies to adopt a digitalization in their businesses. Now, before we go to the next set of questions, we have another quick poll. Now, the question this time is, do you think the process finding funds has become more difficult due to the pandemic. So this is similar to what I've asked Zuhry just now. Now we want to know what you think, whether the process of finding funds has become more difficult because of COVID-19, because of the current uncertainties. I'm seeing that more of you are saying yes, about 70% of you say yes. Very interesting. So maybe Zuhry, they can take note of that as well. Okay. Now my next question, moving on, I'd like to keep going with Zuhry. This is a follow-up question to what I've asked just now. So what do you think companies struggle with the most when it comes to fulfilling the financial requirements for funding? We can put the pandemic aside, but what do you see the challenges that are frequently faced by these companies when they try to meet the financial criteria in order to get funding?
Right. I guess this is something that we've been observing and becoming quite common when companies like startups approach organization like MDB and venture capital companies to seek funding. One of the key points here is visibility. Funders like us and VC companies, we would like to have a full picture of the business that these startups are doing. There are a few data points that I can share that we look for before we make the decision to provide either investments or financing or even grants, for example. So one of the key points or other data points that I mentioned earlier would be the financial data. We would have to estimate or rather have a good overview of what is your fundamental data points, such as break-even point, at what point that we can sustain the business, and then towards increasing the paying customers. Of course, startups usually are quite fond of having these freemium services, which I think is good because it allows your potential customers to have a feel, or rather to have like try before you buy kind of experience, and it's good for you to also use that as a feedback to improve your current products and services. You may have your alpha, beta version and whatnot, so that you can keep on improving and provide a better offerings to your customers. The other data point is your revenue model, which are the ones that will eventually provide you with the sustainability in terms of your cash flow, your commitments to your investors, growing your operations, increasing your marketing activities. These activities requires funding, and because of that, when you come up with your cash flow, when you come up with your business proposal or business plan, try to be as realistic as possible, because there will be a lot of concerns if these things are not addressed realistically. Of course, a lot of if you do pitching, if you do a lot of fundraising activities, there will be a lot of presentation, there will be a lot of different type of investors that you will be meeting up with. So a lot of these I would say concerns will be or rather you have to address during that session. It cannot be something that, oh, I'll come back to you later, because it gives some confidence to funders that, right, this company knows what they're doing. They are ready to leverage on all the risks, or rather all the ups and downs that they might face in the market. And also this is something of quite a significant deal breaker. Sometimes these founders, they might have some existing commitments, like their personal finances. My advice is, these are quite common. try to keep it in a good condition or rather situation. What I'm saying is that your credit scoring, your personal finances, try to make them in order before you plan to approach fundraising, because it will not look good on your personal side. You're having a lot of issues, and at the same time you're trying to convince investors or funders to come in and invest or rather provide funds for your companies. So I hope that is something that we can provide some sort of assistance.
I hope the audience members are taking down notes. These are very crucial information for companies, whether you're a startup or not, for them to know in order to secure the funds that they need. Before I move on, I want to remind our audience members also that we will have a Q&A session at the end. So you can please key in your questions through the Q&A box that we have on Zoom over here. My next question is for Shafinaz. Now, as we've mentioned earlier, funding is one of the main key factors in creating and building digital business models, but there are others. Can you expand on how Cyberjaya's Living Lab capabilities and the technology ecosystem here, how can it play a part in the digital journey of companies?
Okay. Again, I like to cue back what Zuhry just mentioned. Even Khairul also mentioned the same thing. It's all about now journey of getting into the paying customers. And for Cyberview, our unique value proposition through our Living Lab initiative, whereby where you make use of Cyberjaya as your testing location for your commercialization aspect, and that plays an important role for any startups or businesses as far as going through the business journey. And what I'm trying to say is that this kind of, from the innovation that's been created by you, it has to be beyond the adoption of the technology by the customers. It also brings along the collaboration with the other players, with the other ecosystem partners, could be even with industry players, with government agencies, and even during that Living Lab period of the testing period, it gives the startups an understanding better of the gaps or challenges in order to penetrate or commercialize the products. Take it, for example, when you, as a journey to get to the paying customers, one of our Living Lab pilot startup, which Trike, I think this is coming to their second year. Even during the pandemic, you can, even if you're here in Cyberjaya, you'll be able to see in quite a number of the buildings with the yellow electric scooter. Trike is our local startups. They have, together with Cyberview, they've actually, we facilitated them to work with the local council to get them put their electric scooter and allow or enable the electric scooter to be run on the public pavement. And they are not just testing it, because the data that they collected will be able to see what will be their next marketing strategy, and also to have what we call the micro mobility services be made available in the city before they start to look into other areas. And that you can see that even for Trike, rather than when they first started as a non-paid subscription, now they are getting the paying customers. And with that kind of market penetration, they are now moving into, say, for example, like they already started to speak to Putrajaya as the next area for them to have another testing and also commercializing of their product. So the Living Lab capabilities that we put them through in Cyberjaya, not just in terms of their testing of the works of their product offerings, but at the same time, they also learn on how to refine their business strategy, or in a simple word, their business plan. Because while their product to market fit the consumer landscape, they also need some form of financing to expand the market reach. And these are among the startups that we facilitate, or we create that value to the startups as part of the ecosystem that we create, right? And this also, you can see the spirit of collaboration. Even the government, when announced last month, right, through the My Digital initiative, they also would like to have put another targets of having to create another 5,000 startups in the next 5 years. It's not just about creating or catalyzing the startups, but we want to see the sustainability and also the growth of these startups. And for us, Cyberview, obviously, that we know that our journey becoming the global tech hub, where all the innovation or the new emerging technologies are not just being created, but also being tested and proven to be able to capture the markets that they're looking for. So we are now also trying to inculcate this kind of environment through the startups to have a look at what are the actual real problems that is being facing out there in the market, rather than have to do a normal lab R&D. You have to understand what's the problem statements out there, and then the solutions or the innovation that you're coming out with will be something that will be able for you to address the markets. And with that is the living lab that we're looking at. That's the journey coming from the ideation becomes the reality, the product refinement, and out there into the commercialization. And in between that, the other ecosystem partners would complement or fill up the gaps. Should the funding or financing that they're looking for, whether it's a grant, whether it's debt financing, or whether it's an angel investments, these are the kind of the facilitation or enabling part that Cyberview provides to the businesses here.
Shah, there is one question from an audience member. This question comes from Jamie. It's in the Q&A box. She says she's still a bit confused. She has a startup, but who can she approach? Whether is it Cyberview or MTech? And I think we've also mentioned before that MTech, besides MDBs, is also a strategic partner of ours. So maybe Shah, you can shed some light on this.
Okay, all right. Obviously, well, you can approach any of us. I think all Cyberview, MTech, or MDBs, we are all partners in the ecosystem. But obviously, we also provide our own specific intervention programs or facilitation. For Cyberview, definitely we will want to see the growth of the number of the startups and the innovation here in Cyberjaya itself. But there are also programs, depending on the needs. If you're in the early stage of a startup, even at the pre-ideation stage, MTech would have the kind of programs that's suitable, maybe the kind of a boot camp. But then we also collaborate with MTech in putting you through the right facilitation that you need. And if, let's say, you need you're at the growth stage of a startup, what you need would be for you to say for funding, to pitch. So obviously, then we would have the accelerator program, but of course, there's a terms and conditions or criteria that for each agency we'll be looking at. For us in Cyberview, we are always lookout in the specific areas of technologies relating to smart city. Then these will be the kind of startup that we will be focusing more. But of course, through our network with MTech, MTech, or even other agencies and organizations, we were able to connect and put you through to the right facilitation services.
So I think it's noteworthy. Yeah, it's noteworthy to point out to Jamie as well that in Cyberjaya, we have a very collaborative environment where we work together, different partners work together, different companies work together. And since Jamie said she has a startup, if you're interested to know more about our Cyberview Living Lab Accelerator Program, or CLLA, you can check out more information on our website. As I've mentioned earlier, the current cohort is ongoing with Pandai on board. They will graduate in June soon. So the next cohort will start after that. So Jamie, if you have any questions, please do feel free to reach out to us. Now, before we conclude today's session, my last question is for Khairul. So Khairul, we heard about your experience in forming Pandai, where you made a conscious decision during the early stages not to acquire external funds. You've elaborated on the pain points to consider when trying to secure funds. Now, can you give a little bit of advice to other startups out there, especially those facing challenges in getting funds? Khairul.
All right. Okay. I cannot talk a lot about the later stages like Series B, C, D, and etc. And the kind of investment that MDB normally does. The mature, more stable companies. But for early stage companies like startups, usually. Whether you're looking for grants, looking at other kinds of funding, external funding like investments, usually in early stage, apart from having a good product, a good traction, which normally startup will focus on, it is, from my experience, important to also highlight the team as well. So especially in the early stages. And this is because sophisticated investors and experienced investors know with early stage startups, normally the startup will pivot, will change their ideas one way or another along the way, like Shafinas said just now. And with the good founders, you will be able to, weather the storm and then change your business model and improve along the way. So it's important to highlight the team as well, apart from, the products, the traction, the market size, etc. And obviously, we love our own idea, but usually, unless you have, patent or you're creating something new, most ideas, sad to say, are worthless. It's the execution that matters, and that's why team is very, very important. And the way you do this, one, we can highlight our expertise, either the founders or the team members, highlight the background, the experiences that we have before starting the company, for example. Number two, we can also highlight our passion, why we are doing this, our vision, our big ambition, our vested interest in this industry, for example. And number three, apart from expertise and passion, is to also highlight our key learnings and our key insights on the industry, something that we know the others don't. So by highlighting this, we show that you are well positioned in this industry to take the early stage startup and then grow it even more. So it's very, very important to highlight this. Sometimes I see some of the startups forget to brag about themselves. Maybe it's our culture, Asian culture, malu kan nak puji diri sendiri, but it's something that we have to do to showcase what we can do and why we are best positioned in order to take it further. Another thing I would like to share also regarding my experiences with some grants. Yes, I've been fortunate to receive a number of grants totaling a few million ringgit in the past of 1 year or so. But grants is not the number one factor of how successful a company is. In fact, there's a quote by a prominent figure that says the early stage funding is actually inversely correlated to the amount of funding that early stage startup gets. Inversely correlated means the higher you get at the early stage, then the higher the chances that you will fail. Obviously, it's different for later stages. Once you're more mature and stable, and your way around and all. But early stage, sometimes it's also risky to take easy money. So because sometimes we lose focus on some of the things. And to correct some of the misconception by startups, probably young startups who have never had any grants before, I would like to share a few things that I've learned myself throughout Basi also. So number one, grants never or usually never given in one lump sum. Dia tak bagi seketul macam tu. So obviously you win 1 million ringgit or 500,000 ringgit. It's always given in tranches. For example, our superb grant was divided into 4 milestones. Our Khairul 4 milestone, our Sandbox 3 milestone, My Hackathon 5 milestone. So these are there are things that you have to meet. There are a lot of deliverables you have to meet. If you don't meet them, then you won't get the money. So it's not easy money. And number two, it takes a long time. And usually it takes 3 months before you get the first disbursement, and sometimes it takes longer. There's one grant that it took 9 months before we got the first disbursement. So the agency would normally announce you as the winner or recipient everywhere, but it will take a long time. So it's important to be very conservative with our projection and make sure we have other sources of income, either our own funding or income or revenue from paying customers. Number 3, maybe okay. Most, if not all, of the grants in Malaysia are claim basis. So it means that you need to spend first and then claim. So for example, if you get 500,000 ringgit for, let's say, a period of 1 year divided into 4 milestones, so that means 125K for 3 months. So that means a young startup, for example, needs to have 125K in cash to spend first in a period of 3 months before claiming those expenses at the end of 3 months and wait for another up to 1 month in order to get the money back. So even though you win the grant, you need to have some cash first, either your own source of funding or elsewhere, in order to, to roll the money and then claim. And number 4, for grants, we cannot pay ourselves. So there's a lot of restriction on paying the founders. So it's not a get rich scheme because scheme cepat kaya. We cannot line our own pocket. So there's a lot of restriction paying the founders and a lot of restriction paying the team members as well. So usually the grants is to pay other third-party companies for the work that they do for your company. So there's a lot of restriction, even paying for sister companies or related parties lah. And finally, number 5, I would say paperwork. There's a lot of paperwork involved with grants and even with investment. So sometimes it's a full-time job and it takes away from running business as well. So it's not easy to get, but if it is something for us, for you, then maybe it's something worthwhile to pursue for lah. But the reason I'm sharing this because there's a lot of misconception in the market that people think that, by getting grant, it will kickstart the business. And usually grant is actually just to elevate some of the expenses to help us along the way. And it cannot replace a self-sustaining business model, a revenue that we get from paying customers. So before I end, I just want to say that we are somewhat lucky to be in Malaysia, fortunate to Malaysia. There's a lot of monetary assistance. There's a lot of matching grants, soft loans, and even during this pandemic, there's Penjana that covers the OPEC, covers the salary, covers the technology adoption, all kinds. Yes, there are some complaints regarding the waiting period, the processes and all, but the assistance is there. So the first post said something about, there's not enough funding. I would beg to differ. There are fundings, but we have to be creative in finding them, and sometimes look for international funding as well, like we did when we got from an international bank. Second, there's also a lot of non-monetary assistance as well. In Malaysia, there's a lot of training, coaching, pitching session, networking event, even accelerators. So we've been part of the Cradle Accelerator program last year, Magic Accelerator program, and now we're in Cyberview Accelerator program. And this has been very, very helpful. There's no money that we got through the program, but it's very helpful in terms of getting where we are at now. So the second poll actually talk about the difficulty of getting funding during this pandemic. To be honest, for me, I like it when it's more difficult. Because when it's more difficult, it sets a barrier from against other startups to apply. If it's more difficult, if you apply, then the pool of applicants actually becomes smaller, and if the chances of getting it is become much higher. I actually like if the program, for example, it's a program or grant or whatever. Ask for a lot of things, ask for video and essay on the proof, on document and all this stuff, because I know not a lot of people would be rajin enough to apply for all these things. And if I do apply, then the chances of getting it is much higher. So even though, yes, it's more difficult, but trust me, if you go through the motion, then the chances will be much higher. So I guess that's it for now. Having said all the things about funding, I hope that we don't get distracted from something which is more important than funding, which is building a product that solves a specific pain that customers are willing to pay for and that get money from those customers, hopefully recurringly. So that's it from me. Thank you.
Yep, there you go, Securing Funds 101 by Khairul. Good luck to Khairul and your team members of Pandai. And now I think there is one question in the chat box. Khairul, maybe you can take this offline. It's from Chris. It's in the chat box. He has a specific question for Pandai. Maybe you can reach out to him later on. We'll capture his contact name. Now, before I wrap up today's session, just one quick question. I think we have 2 more minutes before it's 12. Very, very briefly, Zuhry, there's one question from the audience member. They're asking, how long does it normally take for a startup to secure investment from the seed stage? Zuhry, very briefly before we wrap up.
Well, if you have the commercial offerings, meaning you got your own revenue and product ready, it will take at most a year for that stage to happen. Usually, the investments would have to go through a series of due diligence, and then you have to come to an agreement to the term sheet. And then when you negotiate for your equity or some collateral involved, it will be disbursed, as soon as that materializes. So estimation of about a year on average, or less than that, depending on how fast negotiations can happen.
All right, ladies and gentlemen, thank you, Zuhry. That's all the time that we have for today. So on behalf of Cyberview, I would like to thank all our panelists for sharing your valuable thoughts with us and our audience today. We hope that you have enjoyed today's session and found it insightful. Thank you again for joining us in our discussion called Financing the Future, Investing in Creating and Building Digital Business Models. We will be back soon with other interesting topics as we engage with a variety of industry players in Malaysia's tech and digital scene. So stay tuned. Selamat berpuasa to all Muslims. Have a great day and stay safe. Thank you.